Like I said in the old days, Cracker Barrel was really one great stock. I mean, for nearly 4 decades after it came public in '81, it steadily marched higher. I used to constantly talk about it, and I used to go all the time. But then, coming to the financial crisis, it did become a mega horse, galloping from 10 and change in late 2008 to an all-time high of 185 in late 2018. It's 10 years. When the pandemic hit, though, the stock, it just got eviscerated. But by April of 2021, it was back to pre-COVID levels. This thing was like Teflon. Since then, though, Cracker Barrel's been rolling downhill. It's now $56 and change, only a few bucks above where it bottomed during lockdown in 2020. So what the heck happened here? When you dig into the numbers, it's clear Cracker Barrel came out of the pandemic as a much weaker operator. That's highly unusual. Sure, they've had some revenue growth versus 2019, but much of that's because they acquired Maple Street Biscuit Company in 2019, and that brand became the only real source of new store growth here. More important, Cracker Barrel's earnings are still nowhere near where they were in 2019 because their profitability never really recovered. See, these guys earned more than $9 per share in 2019, but this year they're only expected to make $4.59 per share, and that's down substantially from 2023, too. The cash flow trajectory is similarly subpar. So what's the problem here? First, consumers have been moving more towards quick service or limited service food places rather than full-service restaurants like Cracker Barrel. Second, their clientele skews older. And because many older people are on a fixed income, they tend to be more resistant to price hikes. While every other restaurant raised prices aggressively over the past few years, Cracker Barrel hasn't had much room to maneuver, even though they're dealing with the same cost inflation as everybody else. Third, the company's been slow to adapt to the modern era. They only introduced a loyalty program late last year. They haven't had much success appealing to younger people. And while Maple Street Biscuit can give them some growth, it's still too small to really move the needle at this point.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.